Here's a concern that I have that's going to impact your ability to produce wealth. It's not advice per se in where to invest, but instead an understanding that you need to have about how money works. I'm Justin Hitt with Sustainable Wealth Secrets. I'm going to talk today about how one central bank is a means to destroy many banking options. The Federal Reserve will pump and dump banks using this new cryptocurrency discussion, and here's kind of how it's going to work. This is a subjugation of the banking system to a central bank that in some ways sounds like it's solving problems, but in other ways is actually creating a means to reduce the problems it has when it comes to control. This is not a conspiracy. You can go look up this stuff and see the potential risks involved with this particular activity. Now, what's going to happen for you is that you won't be able to make financial transactions or decisions about money without someone being able to see what you're doing. So right now, every bank transaction goes to the FDIC as part of their means of enforcing the insurance that's on your account. Any transactions over a certain size is captured by a different system that's used for preventing money laundering and the finance of terrorist groups. The government already knows what you're doing with your money, but a central bank currency, especially a digital currency, would limit your ability to make purchases because it can be turned off. So that's why you need to pay attention. This is why you need to listen carefully. There are central bank currencies by other governments that exist today that the government periodically will turn off someone's money. We do not want this in the United States. So we have cryptocurrency. Everybody's talking about Bitcoin. And very quickly, Bitcoin went from Bitcoin to Ethercoin, like 50 million different coins, Dogecoin, whatever. Because a coin created by software is actually easy to make a new coin created by software. But with the talk of cryptocurrency, the Federal Reserve and various other regulatory organizations step in, rightfully so, to investigate, to try to regulate. But ultimately, the decision has been made by the OCC, the Office of Currency Controls, has now allowed banks to hold and deposit Bitcoin. So Bitcoin is being praised as something that is decentralized and has no central authority, is actually being brought into the fold of the central authority, which is the Central Bank of the United States. They're doing that through allowing their subordinates, which are often subordinate by lending, by regulatory, by other criteria, they're allowing their subordinates to take hold of this. Now, many people have already pointed out the fundamental flaws of Bitcoin. It's being praised as and when I say Bitcoin, I mean in general cryptocurrency, not blockchain technology, not smart contracts, but cryptocurrency. Is the fact that it's being used to defraud individuals. There's a lot of hype around it. There's a lot of activities that are done with crypto that's illegal, and the perception that it's untraceable. But if you have somebody's Bitcoin ID, I can show you the transactions that they've made. It's not at all. It's very transparent. The second point too is that if you have many different types of cryptocurrency that are based on a market or an exchange, and then you have that exchange go down, then what is the recourse for the holders of that currency? So it's not like everybody's got gold coins and the exchange goes down and you just go to the next town over and go to that exchange because the coin is fungible. You can carry it around with you. When cryptocurrency fails, very often there's an audit process, and then you have to bring things up. Now, there's different ways that they handle that. What I always find funny is that people talk about how Bitcoin or digital currency is untraceable, and then they'll talk about smart contracts as being very traceable. Well, they're on the same foundation, folks. Now, encryption, currency, smart contracts, blockchain, all that stuff are different technologies, and it's very complex. But allowing banks to take and deposit these funds, knowing that it's a very flawed system, leaves the banks open to a risk that the flawed system could fail and be blamed on the banks. Now, meanwhile, the the Federal Reserve is actually looking at a central bank digital currency. You can look that up. It's not a secret. And so that would be a competitive product to the existing digital currencies on the marketplace. And if you ask, has the government had a precedence ever to take away one type of currency or exchange and replace it with another? And yes, they have. Gold was confiscated. Different types of means such as barters. Barters, you could barter goods with different values and there was no tax consequences. And then the laws came into place. Now, if you barter, there is a tax consequence because there's a third-party market value rather than the market value between two individuals. But here's the point. Banks fail. Banks have failed in the past. Federal Reserve says, look, you couldn't handle the currency. You couldn't handle your job. Here's our central bank currency. Use this instead. Now, what happens there? Well, the banks would basically just be brokers for this central bank currency that is part of an exchange. So anybody who's clearing transactions would have to also clear their transactions with the Federal Reserve. It solves a lot of problems, actually, because the reporting to the FDIC, the reporting to different organizations for fraud and such could be all centralized. The central bank could take care of these things. So this isn't just a warning for banking systems. This is actually a warning for other agencies that want to have some control over independent investigations. The Federal Reserve not only could create currency, but they can inject it digitally into a system. So they already print money. Now they can print money directly into a system. How do we know this money isn't directly deposited into unauthorized accounts? Well, we do know today that the bank lends money to banks. Central bank lends money to banks, and some of these banks they lend to at the time of lending are not as solvent as they need to be in order to be a good and qualified borrower. But there's reasons beyond the scope of this thing to tell you why that happens. Ultimately, what we're looking at here is that a cryptocurrency is being described as a free market anonymous platform with an end-to-end mapping of all transactions. Can you see the conflict there? If it has an end-to-end mapping of all transactions, then it's not anonymous. And if it then later has a central authority controlling the flow of those transactions, then it's not really free market. Banks were originally prohibited from handling cryptocurrency until the OCC's guidance, and yet banking sectors have been using and testing blockchain for quite a while. By the way, blockchain and smart contracts has lots of value when it comes to monitoring activities. So if you make a contract, there's less fraud if the contract is known to be authorized. And that not only is it authorized, but it has digital signatures, it has proper encryption keys in place, it has enough authority that it eliminates the argument of whether a contract's legitimate or not. You'd be surprised how many contracts are argued about from a terms and ownership perspective. The challenge becomes when a centralized authority has a digital currency. They now have a unlimited view into the ecosystem of transactions. It now makes citizens and banks see, right now when you do business with a bank, it's a private party transaction. So the bank can give you bonus. They can pay you extra money for opening an account. They can bonus you. They can do a lot of things that are unique to that particular bank. They can lend you 110% of the money you need for a particular type of loan. Well, if the central bank controls the money and all the regional bank has is a ledger somewhere, it is possible for that central bank to turn off the money or to dictate terms of the usage of that money. Now, today when a bank borrows money from the central bank, it is a loan that comes with some strings attached. The cryptocurrency will likely be the same, except once the money's transferred from the central bank today, it is actually in the other bank. So it could be currency, it could be securities, it could be something that was easily transferred into other mediums. Where if it is a cryptocurrency, a central bank cryptocurrency, that transaction trace from borrowing from the Fed to application is very clear and transparent. and the money can be pulled back because you could turn off the keys. You could turn off the actual coin. If there is a central authority, and there would be no difference between countries from an economic perspective, because a private party doing business with a foreign government or a foreign agency or a foreign corporation would provide full transparency to a central government or authority, and that money could be turned off prematurely. So, for example, a U.S. corporation may have an office in another country, and they do a transaction that is completely legal, yet some government authority says it's not legal. They could turn off the whole chain because there wouldn't be a physical – today there isn't a physical transaction, but it wouldn't be a private party transaction. It would be a transaction that had to be cleared by a central system or a clearinghouse controlled by a central system. Now, today, there are ways of shutting down people's funds. There are ways of doing the things that I'm saying are risks here, but it's not as easy as flipping a switch. There's a lot of warrants. There's a lot of other paperwork that's required. A cryptocurrency could invalidate the block or lock that block and not allow it to be transferred. So it would be like having a stack of $1 bills, and the serial number on that $1 bill represents that bill, and someone having remote control to turn off that $1 so that when you try to use it, that serial number is no longer valid. And they're doing it remote. Now with physical currency, with the current banking system and the clearinghouses that are available today through SWIFT and such, it's a lot harder to turn the money off. You can still turn it off, but it's a lot harder to turn off. There's a lot more evidence and a lot more due diligence. It wouldn't be just one group. There's a lot of groups involved. So from wealth building, what does this mean? What does this mean? What does it mean that you could get $1 million in your bank account that a government could turn off for some reason? Well, it means that wealth cannot be currency alone. In fact, if you've got the fiat dollar as your only source of wealth, and that dollar is not engaged in physical activity. Now, I'm not advocating buying gold and silver, but land, control over corporations, cash flow, so that new money's coming in at a consistent basis. These are other aspects that will build wealth. Is there a risk that there will become a central bank currency? Yes. There's already lots of discussion about it. There are other countries that have central bank currencies. There's some countries that standardized on Bitcoin. But I'm not saying you should go invest in these coins. They have fatal flaws. They're being marketed differently than they are actually used. They still have the same transparency risks. You may not be doing an illegal transaction, but you may not want others to know that you're making a transaction. And I always go back to the example of Walt Disney going and buying the land for Disney World. If people would have known he's buying that land, the land would have started costing a lot more quickly. So it was purchased under companies. And by buying it under those other companies, he was able to consolidate it later after the acquisition was finished. I'm not saying you should barter transactions, but that might be an option to do contract terms. So one of the concepts of cryptocurrency is that it's a contract transaction. Well, you can do a contract outside of cryptocurrency. You can buy X goods under a contract in exchange for X other goods. But ultimately, you need to understand a central bank system. You need to advocate free markets in the political discourse. You need to advocate sound money in both policy and your business activities. So don't go borrowing money to buy something that you're not sure you can pay the money back with. And number 4, you want to focus on assets that cash flow. You're going to beat inflation. You're going to have a means to compete if somebody shuts down your funds. And ultimately, you're going to have a little bit more structure and stake with how those interactions are done. So it makes it a little bit harder for somebody to shut it all down. I'm Justin Hitt with Sustainable Wealth Secrets. I hope I've covered this topic clearly and in a way that's easy for you to understand and take action. If not, write with your questions at www.sustainablewealthsecrets.com. I'm here to help affluent individuals transform income into wealth, into opportunity, into the financial security and freedom that you were promised when you put the work in to make the money in the first place. And I want to do that in such a way that maintains free markets and freedom. Thanks for listening.